Today I'm reviewing the BECU adjustable rate home loan, focusing on the actual user experience and details that matter if you're seriously considering this mortgage product. BECU, or Boeing Employees Credit Union, is a not-for-profit credit union based in Washington State, and they offer a wide range of financial products, including home loans. The adjustable rate home loan, commonly referred to as an ARM, is one of their more flexible offerings. Let's start with the basic structure. BECU offers various ARM terms, most notably the 5/6 ARM and 7/6 ARM. These options come with an initial fixed interest rate for 5 or 7 years respectively, and then adjust every 6 months after the fixed period. The starting rates are often lower than traditional fixed-rate mortgages, which can be attractive to first-time buyers or those who don't plan on staying in the home long-term. However, after the fixed period, the rate can change significantly based on market conditions. BECU's ARMs are tied to the SOFR index, which replaced LIBOR, and come with specific caps to limit how much the rate can increase per adjustment period and over the life of the loan. This helps with predictability, but it's still a risk factor to consider. One of the standout features is that BECU does not charge origination fees on many of its loans, which can save borrowers a few $1,000s upfront. This alone is a big plus compared to traditional banks. Their online application process is decent, straightforward but not the fastest I've tested. You can start the process online, but eventually you'll be contacted by a loan officer. This can be helpful for new buyers, but might slow things down if you're used to fully digital platforms. BECU does emphasize member service, and if you're already a member, the process is smoother. They also require membership for loan approval, which includes having an account with them and meeting certain residency or employment criteria. The underwriting and approval process is relatively conservative, which means they're more cautious in evaluating debt-to-income ratios and credit history. This is great for long-term stability, but might not be ideal for borrowers with unique financial situations or self-employed income. Many other useful links you can find in the description. One important downside is that the maximum loan limits may be lower than those of larger national lenders, especially for jumbo loans. BECU tends to focus more on local borrowers, and their products are generally tailored to members in Washington, Oregon, and Idaho. If you're out of state, you may not even be eligible. Another drawback is the limited ability to lock rates early in the process, which can be a concern when rates are fluctuating frequently. That said, BECU does have a solid reputation for member satisfaction, and their loan officers are generally well-reviewed. The lack of pressure sales tactics is refreshing, and their transparency with rate disclosures on their website is better than average. The rate comparison tools provided are decent, although they don't offer in-depth calculators for estimating long-term payments or comparing ARM versus fixed-rate loans. BECU's adjustable rate home loan is best suited for borrowers who are financially stable, understand the risks of fluctuating interest, and plan to sell or refinance before the adjustable period becomes unfavorable. If you're looking for rock-bottom initial rates and trust that your financial situation will improve or remain stable, this can be a smart option. But if stability and predictability are your priorities, this might not be the best fit. Thanks for watching. If you found this review helpful, make sure to like the video, subscribe for more in-depth reviews, and leave a comment if you've had any experience with BECU loans.